morning, everyone. I will start the session with the participants available. Uh, I think we have enough. If we have enough attendees on call, so I would like to welcome all of you in today's session, which is New Era for ESG Assurance. I'm Urush Khan, ESG Assurance Lead and Director at KPMG Middle East, and I'll be moderating to today's session. We have global expert and speakers here today. We have Lee White, who is the CEO of IFAC. Lee has been a leading global voice in advancing high quality and trusted sustainability reporting and assurance. He has strongly advocated for the development of ISSA 5000 as a critical response to the growing demand for credible ESG assurance. And it's a great pleasure to have him with us here today to share his perspective on global ESG landscape and strategic significance of ISSA 5000. We also have Neil Morris, who is a board member at IAASB and partner at KPMG. Neil has played a key role in the development of ISSA 5000, bringing both standard setting and practitioners' perspective to the table. He has also been actively involved in shaping the new sustainability assurance framework. So with his deep expertise in ESG assurance, Neil will bring his invaluable insight into the practical implementation of ISSA 5000, including how firms and companies can adopt it. So, as we all know, that sustainability landscape is rapidly evolving. Investors and regulators and even customers are demanding assurance that is reported and reflects the true ESG performance and future readiness of organization. That's why today's topic is so important with the launch of ISSA 5000 and the new sustainability assurance standard. It is a big step towards establishing trust and sustainability information. So I think I will ask Lee to set the scene for us in terms of how the ESG landscape has shifted over the last few years. And in fact, over the last few months, there has been dramatic changes. So Lee, from your vantage point of view at IFAC, how does the ESG landscape looks like for you? And what are the most critical drivers behind this transformation in sustainability?
Thank you very much for that question. And as well, thank you for the invitation to be here today and to have the conversation with Neil and with the participants. Let me try and unpack this sustainability reporting landscape just for a few minutes. I might try and do it at a global level, bring it down then to somewhat regional or jurisdictional level, and also focus about why, which is the drivers of which you referred to. If we look at a global level in the last few years, and by that I genuinely mean the last few years, I think we've seen a very significant shift. One could argue once in a generational shift in reporting, where sustainability reporting or its earlier incarnations of that has moved from what you might describe as useful information to now, which is core critical information. It's mainstream, and there's no shifting away from that now. It's fundamentally mainstream. So at a high level, we've seen some jurisdictions move quickly, and others are moving at a more cautious pace. And that's selections of who sees the desires to move in this direction more quickly than others. We should focus at the ISSB level, the International Sustainability Standards Board level. Apologies to everyone up front about acronyms. There's a lot in these discussions, but it's been currently reported that there's 36 jurisdictions currently that have either aligned or moving to take steps to align to the global baseline of the ISSB. And just to remind everyone on the timeframes, those standards were released in June of 2023. So we're still not 2 years on an anniversary date, and we're up to 36 jurisdictions. That's a remarkable progress. And if those old enough like me can reflect back to the introduction of the IFRS accounting standards, there was a much longer take up of those standards. Second element is just to come down from that global look to what's happening at a regional jurisdictional. I think the first place to look is to Europe. Europe went early and went with a very bold and ambitious program through the CSRD, again another acronym, but the corporate reporting that they proposed to do, which is already underway. And I think in your remarks you sort of specified particularly around the last few months, and Europe is one of these jurisdictions where there's been a response at a political level driven by the sense that there's been too much being requested of the corporate community at this time, where there's currently a focus on what they call the omnibus of simplification happening in Europe. My messages to those today is that's not Europe turning away from sustainability reporting, but putting somewhat of a slight pause in order to recalibrate some of the policy settings, who was to report, how much they were to report, and so forth at this time. That still hasn't been finalised. That goes through basically a EU parliamentary process, and the next few months will bring some clarity into that. And then we can look at other jurisdictions. I won't go through them all. Probably best to say in the United States, there's a bottom-up approach where it's market-driven and investor demand rather than necessarily, as I was talking in contrast with Europe, a top-down approach. But let me leave this with very much that this is now a fundamental shift happening in sustainability reporting in a short period of time, where it's gone largely from a nice to have to now mainstream, driven largely by investor demand. Global investor demand has said, we want this information, we want it to be international, comparable, and consistent in the way in which it's being reported. And I think it's a very exciting time. Thank you.
Thanks, Lee. And I think it's a great message that Europe is not stepping back in sustainability, it's just making reporting more practical, and it's a step approach. So I think globally, initially the view was that sustainability is taking a step back, but because of the regulation, it's just a more practical approach.
That's how I would see it as well, very much. And, if we think in this short period of time when organisations have to train people, they have to change systems, they've got to make sure internal controls. And we all recognise, and we might come into this deeper in the discussion around assurance, there will be data gaps. And so I remain very, very optimistic about the direction in the next 5 years or so with the sustainability reporting.
That's for sure. Internal controls are very, very important for ESG. And on the topic of ESG assurance itself, I wanted to move on to Neil and ask him that we already had ISSA 3000, which all assurance providers are following. And question naturally arises: why is there a need for a new separate standard? And what was missing in the existing framework that ISSA 5000 had to be developed?
Okay, yeah. I mean, I think it's a great question, and you've got to make sure when you answer the question, we don't undermine the assurance which is currently being provided in the market, mostly using ISA 3000. I think Lee's done a great job at sort of articulating this changing reporting environment, and the changing reporting environment, the changing regulations, the changing use are key drivers in why we're needing to update the assurance standard. 3000 revised. It was probably last updated just over 10 years ago. I think the effective date was 2015. Lee's described changes in the last couple of years which would warrant it. So this standard has been around for a long time. It's provided a really solid foundation, especially for those that have been using the standard for a number of years. for those that have got experience in delivering ESG or sustainability assurance engagement. And I think their experience has enabled them to use their judgment to fill in the gaps of the current guidance. 3000 is a general standard. It's not specific to sustainability information. And so there are a number of areas where you really do need experience and judgment to close down some of those gaps. In 2021, there was the extended external reporting guidance that was issued by the ISSA. I think that was really useful as well. And that provided some specific areas of guidance on a number of important areas relating to sustainability. I regularly refer back to that guidance, and I can tell you that that guidance was very influential in how we then developed 5000 as well. But Lee spoke about these reporting frameworks, the regulatory environment, the needs of the users. These are all rapidly evolving. And with that, we're getting a significant increase in the number of professionals that are looking to provide assurance. And they're going to be doing this for the first time. And this, for me, is one of the key drivers that then says, we need a standard which is more specific to sustainability that would guide assurance practitioners to deliver high quality assurance in a more consistent manner, especially given the growth. The use of our reports has changed significantly. If I think back, the first report I signed was probably in 2010. And over the last 15 years, we've gone from providing internal comfort, maybe you get an extra point in some sort of ESG rating scale, but we're now providing genuine, robust challenge to information which is influencing where you invest, where you choose to work, who you're going to choose to buy from. It's a significant driver. And this changing environment means that comparatives to previous years, in terms of the information provided, the quality of the assurance, just isn't relevant. So that past isn't an appropriate benchmark. We're in a different environment, and that different environment requires a different assurance response. And the ISSB response to that is 5000. We held roundtables on every continent except Antarctica with a wide variety of stakeholders. And the message was absolutely clear that more was expected of auditors. No one asked for more of the same, and no one asked for less. And so 5000 then is a key driver in being more specific of what's needed. And we know that this will drive higher quality assurance over ESG sustainability information. And the driver of improving the assurance, we know, will improve these disclosures. Improved disclosures are going to lead to better decision-making, and better decision-making over environmental, social, and governance matters is absolutely fundamental in the protection of the public interest. So why do we need 5000? We need it because it's going to be a key driver in protecting of the public interest over this information, which is becoming really important in decisions that we're all taking.
Thanks, Neil. As most of the organization would want to know that how can they prepare themselves for it, and how does it differ from the previous assurance? Is there any change in materiality? Is there any other change in how assurance will be done on their controls? If you can give some more details, a little bit of a deep down.
Sure. I mean, so my first reaction is, and as Lee articulated, the biggest drivers of this environment for preparers in particular is more the reporting frameworks and the regulatory requirements and the expectations of investors and users. That, for me, is the biggest driver of effort that preparers of this information should be catering towards. If they can meet the requirements of the framework, if they can meet the requirements of the regulation, if they can meet the expectations of their users and investors, and it's delivered at the quality expected, I think the preparation that they need for 5000 becomes almost less relevant, because it naturally falls out to say, I've met these higher expectations of these reporting standards, and therefore this is appropriate. We would never want to have 5000 driving a higher expectation than what the reporting standard is expecting of the user. So don't ever expect that the assurance standard trumps the requirement of the reporting framework. So first of all, similar to 3000, 5000 is reporting standard agnostic. right? So you can apply this standard to whichever reporting framework it is, be it from the ISSB, be it the ESRSs, be it whatever happens to be developed in a local region. And just by the way, fragmentation is something that we want to try and limit, right? So we've allowed 5,000 to be framework agnostic, but we're certainly not encouraging the development of multiple frameworks. We want the fewer frameworks, the better. The few assurance standards, the better. So we're also not wanting assurance standards to evolve. The first key difference that I put down on the table is to tell you that, and hold on to your seats, and I don't want this to be taken the wrong way, but 3,000 has about 90 requirements that an assurance provider needs to meet. 5,000 has over 200. Now, that doesn't mean that you as a preparer are going to be overwhelmed with questions and requirements and information that you need to provide your assurance provider. What it means is that 5,000 is more specific about what the practitioner needs to deliver and ask and prepare so that we can have a higher quality and more consistent approach. Remember those gaps I spoke about? So the key piece, the move from the 90 to the 200, it's filling in the gaps. It's filling in what the experienced practitioners were already doing. It's providing what was guidance and making the requirements so that we get more consistent application. So that for me is driver number one. You're going to get more specificity. I think you'll get more consistency. Then I think it's important to go towards quality management and ethical requirements. So we are clearer around 5,000 in terms of the quality management and the ethical requirements. And that's important so that we get better consistency from auditors and non-auditors that are going to be applying 5,000. And ISSA has developed their code as well, which is now available to the non-practitioners too. And so we'll get more consistency there. So I think that's the next sort of key consistency that I'd pick up on. If you wanted to go into some of the details, I think if you read word for word, you'll find that materiality might be a little bit more specific, particularly under qualitative areas. Not so much over the data points, but the qualitative areas, I think we're going to be more specific around what materiality looks like. I think auditors will be encouraged to do a little bit more work around the system of internal controls. And that's a good thing because this universe of sustainability information is about completeness. And you only get the completeness of information if you've got a good process and controls in place to capture this information at the time of it occurring. You don't get a third party that can send you a confirmation for your emissions, right? If you didn't have a process that captured the emissions at the time of it occurring, that opportunity for capturing that information is lost. So I think there would be more drive to get better work done on internal controls. It's not a significant step up, but it's there. Risk assessment, I think you'll see auditors being a little bit more targeted around what actually is the risk of this information being misstated, and then hopefully designing more procedures to be specific and targeted. So they'll take less of a general generic approach. I think they can be more specific and targeted. I think using the work of others, particularly when it comes to value chain information, there are a few opportunities there that we can then leverage work, particularly of whether it's specialists or whether it's others in the value chain. I think there's some good changes there and some guidance. We've got improved requirements on forward-looking information. So we've had estimates, and now we've got forward-looking information as well. So that forward-looking information has been brought into 5,000. I think that'll be really helpful for others. The last one I'd highlight for you is other information. So as this information is being bundled together with most likely financial information and other reports, what are the responsibilities of the assurance provider around this other information? I think we've got some clarity there and probably a little bit of an extension of what they've been doing in the past in terms of 3,000. So those would be some key things that I'd highlight, but I'd go back to my opening remarks that the reporting frameworks, the regulatory requirements, the expectations of your users and investors, that's going to be the biggest driver of what you're needing to get right rather than the assurance standard. The assurance standard isn't the driver here. It's responsive.
Thank you, Neil, for listing out the details. I think one thing we often heard from investors and companies was that ISA 3000 felt too flexible and too generic in nature, lacking specific directions. And ISA 5000 will address all of that by providing a clear roadmap for ESG specific engagement while maintaining the robustness of the principle based assurance. But one question which everyone would want to know is from both yourself, Neil and Lee, was there any uh, challenges faced during the process of making ISA 5000? And will the companies face any challenges internally to prepare themselves for ISA 5000 assurance?
Lee, do you want to give that a go first?
I might, Neil. Thank you very much, and you've sort of set that up very, very well. Can I come back to an earlier remark of Neil's, which was around fragmentation? And to me, at the broader level, this is such a challenge that we do not end up in a place where there is fragmentation. We've now got ISA 5000. That needs to be implemented. It's the global baseline in which assurance is being developed. If there is fragmentation, it adds cost. It adds cost, and that's not anything anyone would want to have in the reporting system. But even bigger than that is you may see that it leads to greater confusion in the market, and that comes from not only the use of which standard, but who is providing that assurance as well. This is quite critical because whilst Neil has appropriately said it's agnostic standard, so other professions can deliver it, it's very, very important that it's on a level playing field. And by that phrase, I mean that the level of entry into the provision of the services, the requirements of education, of ethical adherence, and obviously of oversight of those providing the assurance is consistent, irrespective of the profession that's being delivering those services. I think down at the entity level, without getting into all the details, I think there's a key message here that this is all about us commencing the activities of reporting and the delivery of the assurance on that reporting, and it will take some time. We can't expect all of the requirements, all of the data, the systems all to be in place right at the start, but that shouldn't be a reason that anyone waits. We've now got the tools, we've got the reporting requirements, we've got the assurance requirements. We need to take the steps. But for my reach to CFOs, CEOs, audit committees is understanding that it is going to feel quite different in the early stages to a very mature system in place with financial reporting. You know, we've all lived and breathed financial reporting for decades now. This is different. And we just need to be comfortable, but there's a natural tendency, well, this didn't happen over here in financial reporting. Why am I feeling it now? And the answer is because this is different. It's going to be part of integrated in the reporting. So you will see that the story from the financial statements, if I could use that, or the narrative that comes from the financial statements, you know, there will be questions about, am I feeling the same narrative on the sustainability side? The two will need to join up and be one clear. But there's differences. And the obvious one is, and Neil made reference to it, a lot of financial reporting, and I am an accountant, so I can talk about myself here now. A lot of the financial reporting is largely about what's been completed. A large amount of what's happening in sustainability reporting is the short, medium, longer term future. And that's quite a difference that we all need to get more comfortable with. Neil, you might want to have a crack as well.
Yeah, I mean, I think, so if we go back to the fragmentation, I think the key for me is around when you've got 5,000, we've put this down on the table now. There's a temptation that everyone says, oh, well, you know, if I had a chance, maybe I would change this and I'd edit that and I would make this this better here, or let's remove that. And so I speak from two perspectives. One, we've put this down. This is a great baseline. And I would do your utmost if you're ever sitting in a discussion or a debate or a meeting to say, let's go with the baseline. Let's do our very best not to make any changes to it. And let's rather work as an international community where we think that the standard might need some change. Once it's marinated for a little and we've used it a bit, we say, hey, we've got some great suggestions. We take that back to a global setup like the ISSB that can deliberate, understand, and say, those are good suggestions. Let's start making some of these changes. But then in that manner, we all remain globally consistent. So from an assurance perspective, move away from the temptation of just changing a word. As a KPMG person who's currently now drafting our methodology, there are some wording differences. And each time I see that word change in the US or someone in Europe wants to make it slightly different and it looks better in translation, it becomes very difficult for us to apply a methodology in a consistent manner across a multi-national organization. And they'll start saying, why do your German colleagues do this and your French colleagues do that? And then the US says, oh, we're not sure if we can rely on the work done by this organization or these practitioners because they haven't followed these requirements. And it's time and cost and uncertainty that gets laid into it. So for companies, for assurance providers, I think the key is 5,000. Hopefully you've been delivering really good, robust 3,000. And so the move from 3,000 to 5,000 becomes more academic around methodologies and training and understanding the specificities. And what the companies are experiencing is driven from the reporting frameworks rather than the assurance standards. So that's what I'm hoping for. And consistency in the application, I think, is really what I'm key to drive on. That this is the global baseline, and everyone accepts it. And where we're tempted to make change, bring those back. Let's talk about it.
And is there a specific timeline for mandatory adoption, or is it voluntary? And if anyone wants to do an early adoption of ISA 5000, will it be seen positively by investors or regulators? What's your advice for the companies?
I'll have a first crack at that. As I said in my introductory remarks, a lot of the drivers coming to where we are today has come from the global investor community. And they've asked for this information in order for them to be able to allocate capital in a more efficient way, because up until now they felt there was an absence of consistent and valuable information. So that shift is changing. But the reporting is one piece, but like in financial reporting, the investor community, the users of the information, want to know that there's a level of assurance that accompanies that. Now, that doesn't mean they want it tomorrow, but that is the meaning that they do want to see those developments occurring, that the information can be relied on, and really importantly here in the world of delivery of assurance, can be trusted. So this information can be trusted because of the assurance that accompanies the reporting. And so if I was leading a business that was on this journey, I'd be wanting to plan out, okay, which level of reporting are we doing? We may be already starting, or we may have already done TCFD or some form of that already, understanding my timelines in which I can deliver that, and then wanting to understand the steps we're taking in preparation for assurance. I may not have the ambition for assurance being delivered tomorrow or the next round of financial statements, but I may be asking to say, I'd like some pre-assurance work to be undertaken now. I'd like a health check on the systems that are delivering in order for me to understand then the steps that I'd need to take. But any business that does not have the planning in place for assurance, I'd be saying now is the time you really need to think about how and when that's going to be delivered.
Yeah. So the specific question around, are you allowed to adopt 5,000 early? The answer to that is yes, you are. Australia has. So Australia has adopted ISSA 5,000 with effect from 1 January 2025, which it was an incredible sort of speed at which they adopted it. So that'll become effective for some entities at December 2025. Now, they'll need to apply it over a small number of disclosures, so different to Europe. It's not over the full report. And so the narrower number of disclosures means that it's more achievable for those entities that would have a December 25 year end. Many of the Australian entities actually have a June year end, so it'll become applicable for them June 26. Gives the practitioners a bit of a longer lead time to be able to get prepared. So I can tell you that adopting 5,000 in a timeline of by 31 December 25, even if it's over a select number of indicators, that's pretty fast from a methodology point of view. So for us to be able to redesign a methodology, understand where the differences are, remember it's 90 to 200 requirements. We got to go and reconcile each of those differences so that we understand that we are in fact meeting the requirements of it. I'd worry that an accelerated adoption could undermine really what the strength and the benefits is of 5,000 because we're not able to move as fast. But I think the limited number of disclosures makes it easier for the Australians. If you were to adopt it, say, in line with the 31 December 2026 period end, I think that's quite comfortably achievable. The standard itself is effectively going to be applied by December 27. So that's really when it would be applied for most December year ends. I think that gives us more than enough time for practitioners, for their firms to assess their methodology, update their methodology, engage with their clients, train their staff, realign their technology, so that they can really, do a great job when December 27 comes around. So those are the timelines. I guess the last piece I'd put in is we did put a conforming amendment through ISA 3,000, which means that on the effective date of 5,000, 3,000 can no longer be used as the standard for sustainability assurance. Now that might vary in some regions, so a region may not just adopt that conforming amendment. They would be a little out of the line that their local standard still follows 3,000, but we have put that amendment through on 3,000. So when 5,000 becomes effective, 3,000 is no longer usable on sustainability information. Also, at our last IAASB board meeting in March, we unanimously voted to approve the withdrawal of 3410, which is the GHG standard. So again, on the effective date of 5,000, the GHG standard is withdrawn and no longer applicable as well. So those are two other changes I think you need to be aware of when 5,000 does become effective.
Thanks, Neil. We already have some questions on the chat. So does ISA 5000 cover group reporting similar to ISA 600? A lot of us are facing challenges specifically when it comes to scope 3 emissions and group reporting.
So, so the answer is yes and no. So 5,000 covers groups, absolutely. To the extent it does in terms of ISA 600, no. Now, this is a single standard. And the single standard covers all the topics of all of the auditing standards. And so we cannot address every one of the auditing standards in what is an overarching 5,000 standard. But we've incorporated groups, we've incorporated components, we've incorporated value chain, we've used principles from 600, we've applied that in getting to this overarching standard. Maybe in time, we realize that actually, wow, this is an area we need more on. And so maybe there is then a sustainability 600 version that comes out once everyone's had an opportunity to be applying it. We had to incorporate groups, value chains, etc., because the first reporters are the largest reporters. The first reporters are the ones that are groups. The first reporters are the biggest value chains. And so 5,000 would be deficient if we didn't incorporate some of those principles. So Yes, we've incorporated groups. No, it doesn't go as far as 600, but I think there's more than enough there to get everyone down the road in these first reporting cycles.
Thank you, Neil. Yeah.
Could I just add a little bit to your question just around Scope 3? And it's a message around the preparation of Scope 3 as much around the assurance. Scope 3 disproportionately at times gets so much attention. Yes, I understand it's where largely 80% of the GHG is called under Scope 3, but most of the reporting requirements, including the ISSB, there are delays in which the reporting requires. It doesn't mean you can start with Scope 1 and Scope 2 and then 12 to 24 months down the line. Some jurisdictions decided to take even longer in their adoption around Scope 3. So it will take time for the maturity of the reporting and then ultimately the assurance around Scope 3 to occur. It just won't feel what we normally would have as expectations on what you might say is day one. But nevertheless, it's important information, but we need to start thinking about it and working with Scope 3 now, but it will take time.
Yeah, that's true. You mentioned earlier, Lee, that the ISA 5000 requirements doesn't overtake the regulatory requirements. So I think one of the questions is that do we expect ISA 5000 to align with EU CSRD?
Well, it's a little bit unclear right at this point. I think Europe has often looked towards the international standards in order to confirm its approach. As I mentioned earlier, with the omnibus simplification, which is still to be resolved later this year, there's a little bit of uncertainty. My hope and desire is 5,000 is a global baseline. We need Europe to be part of it. And it's just at this point that Europe's resettling more around the reporting than necessarily on the assurance, but we need to see where that will land at this time. Neil, you may have closer information.
Yeah. I mean, so for me, in terms of Europe and adopting 5,000, first of all, during the development of 5,000, there are many stakeholders. Europe was one of them. We engaged pretty closely with them during the development. We wanted to make sure that 5,000 was going to be a suitable baseline standard for their purposes at the time. And I think we were really nicely aligned there. There were some areas that they needed to perhaps go beyond 5,000 so that they would be able to meet their specific requirements. So I think we were on a good pace there. Then, as part of the CSRD, Europe was looking to adopt a single assurance standard. But that's not what they do in auditing standards, right? Each country adopts auditing standards individually. So this would have been quite a nice silver bullet to get all of Europe to adopt the 5,000 as a baseline in a single shot. That would have been great. It hasn't happened currently in terms of the omnibus. They've put a pause on that. That doesn't mean they're not going to adopt it, but where we are right now is that we're back to where we are in the same process that we have for auditing. That each member state needs to consider 5,000 and determine if this is the standard that they are going to adopt in their jurisdiction. The EU will also put out guidance. The guidance will perhaps fill the gap between where we are today with 3,000 and where we hope to get to with a 5,000 equivalent in the future. So, from an ISSB perspective, we take a longer term view. The standard setters aren't drawn in from one meeting to the next, which is quite emotional. It's somewhat political at times, and it goes up and down. We've got a great standard out there, and the standard is out and available for everyone's use. They can sit, consider it, think about it, and hopefully we'll start seeing that member state adoption in the same way that we're seeing from an audit perspective. I think we're reasonably calm at the moment. No one's trying to push it down in everyone's throat. There isn't actually a great alternative to consider. 5,000 is the best that's there. We're not looking for fragmentation. We do want its adoption. It'll just take a little bit longer through this process.
And Neil, as you mentioned, Australia was the only one to early adopt. Given our capacity, what is the best way we can prepare our clients and how to take a proactive approach I mean, some region might still be a bit hesitant in, I mean, they're still catching up to the new frameworks and approaching the clients with ISA 5000. What's the advice that you can give us?
I mean, so from a KPMG perspective, we put out a publication called ISSA 5000. Are you ready? I maybe I butchered the name there for a moment. But I think it's a great opportunity to go and have a similar conversation that we're having today. It doesn't need to be about the details of 5,000 and each moving requirement and how this is going to impact the assurance that they're providing. I think it's great to go and say there's a newer standard. Hey, but by the way, let's talk about the reporting frameworks, the regulations, the timelines. What's your team like? Are there specialists? Who's preparing it? What are the controls? Have you got your audit committee involved? I think have a broader discussion than trying to just engage on the topic of 5,000. But the topic of 5,000 might be a good headline to get the discussion started, or it might be the headline that creates the need for the discussion. But in the same way that we've spoken far more broadly than requirement for requirement, I think that's the approach, so that we all get a sort of a good common understanding of the reporting universe and the evolution and the moving parts that we're trying to work with at the moment.
And could I just add it just a little bit further to what Neil's added, which was very, very good, which is elevating it from perhaps the detail into a more strategic conversation. I think to add to that is if we think about the reporting requirements, to go one level up higher isn't about the reporting, but to think of the business model of the business and to ask about the risks and opportunities that are happening to this business model coming from the sustainability or climate changes in particular. And they can be physical changes, they could be regulatory changes, whatever, but also opportunities. How does the business model shift in light of these requirements starting to be reported, and what should we do with this business in advance of all of that information being prepared and then assured? It's actually, and if you think from an assurer's perspective, that's a really value-adding part in the delivery of the service to elevate the thinking around the business model away from more the detail, if I could say that way. Thank you.
Yeah. And I think one of the most common questions we get is, what is limited assurance versus reasonable assurance? And I think a follow-up question would be, does the new standard have specific guidance on both limited and reasonable assurance?
Okay. So common question, right? What's the difference between limited and reasonable? So straight out the gate, the answer to that is in the name. So limited assurance is exactly that. It's limited. There are some limitations. The key difference that you take from the two approaches is the level of confidence that the practitioner has as to whether there's a material misstatement in the information. Reasonable assurance is very much like a financial statement audit. You come away with a high degree of confidence that there is not a material misstatement, and the auditor makes a positive statement that says the information is not materially misstated. That's a pretty confident view to put down. Right? So reasonable assurance, high confidence, they put down that statement, the information is not materially misstated. Limited assurance, you've performed less work. I'll talk through where you've done less work, but ultimately you've got to less confidence in your conclusion. You've said, based on the work that I've done, nothing's come to my attention that this is materially wrong. Hey, that's not nearly as bold as this is not materially wrong. You're saying, from what I've done, nothing came to my attention. But to help the reader, we had to tell them what we've done, right? So otherwise they've got no idea. And so to do that, a limited assurance report has provided a summary of the procedures that you performed. Now, this is some of the mystery, right? It's very difficult for the practitioner to know the level of assurance that they're providing. Now, all that the user gets is a summary of the work that they've done, and they're meant to take a level of confidence from that. So we say, we've performed a summary of these procedures, and having performed those procedures, nothing came to our attention that is materially misstated. Okay, so that's how a reader is meant to interpret this report, and that's where you're going to get some sliding scale as to where you are from a limited assurance perspective. So limited assurance does less understanding. With less understanding, you identify fewer risks. Because you've identified fewer risks, you would have fewer areas that you would respond to. And when you respond, you would perform a lighter touch in terms of the procedures. Our procedures vary because of the nature, timing, and extent. And so you might do more inquiries and analytical reviews in terms of nature rather than real test of detail. You might, from a timing point of view, you might perform these procedures a little bit earlier in the year and then say, look, nothing came to my attention, so I believe that the year-end balance is still right. An extent, you might test far fewer items as part of limited assurance that you do in reasonable. But remember, your conclusion says nothing came to my attention. So the catch is, if something does come to your attention, and as soon as something comes to your attention, which in these early stages of reporting, it's very likely that it is, right? It's an immature environment, it's a new reporting framework, there's a good chance that you're going to bump into a problem. And if you bump into a problem, you're going to have to run it to ground, because there are two outcomes when something comes to your attention. You run it to ground and it turns out the preparer fixes it or it wasn't a problem, or you determine that it can't be fixed and it's a misstatement, and we have to consider what that looks like in terms of the conclusion. And so when you start bumping into problems, you start running them to ground, very similar to how you react to things in reasonable assurance. And I think that's kind of also where it gets confusing when you're delivering an engagement. Someone says, why are you doing all of this work? This doesn't feel like limited assurance. Well, you're doing all of this work, especially when you're trying to run something to ground. So that, for me, difference is the level of confidence. You've got a negative opinion, nothing came to my attention, limited assurance. Reasonable opinion, high level of confidence, this is not materially misstated. Regulations at the moment are designed around what they're expecting users' needs are. Assurance should be designed based on a user's needs. The regulations assume that users need limited assurance. Many of the regulations have an evolution to consider reasonable assurance in the future. That's one of the pieces of the omnibus which will be taken out for Europe for now. But yeah, that's hopefully the closest I can get in a few minutes to explaining the difference.
And perhaps if I could just add a little bit, and Neil's done that very well to cover that area. Assurance is all about trust. I trust the information. And so either limited or reasonable delivers a level of trust. So that's really important. But all of us need to manage expectations, because at this point in time, where jurisdictions or organisations may elect for a limited, but their financial statements are, you can just see that there is a vulnerability here or susceptibility to a level of confusion. We need to be really careful to manage expectations in these phases of what's occurring. But it's also important that limited does not create that there isn't a sense that it's somehow cheaper and easy. It's not. It's still a form of assurance for trust.
And Lee, I'd add to it as well that limited assurance doesn't mean that the preparer prepares the information with any less vigor. This is not something that impacts the preparer. The preparer still prepares the information as it's required in terms of the framework. All this does is reduce the extent of checking that the practitioner performs. And I think that's a misconception that definitely needs to be ironed out.
Thanks, Neil. I think you pointed out a very, very big misconception that the preparer needs to prepare everything for limited assurance. Do we see the ultimate goal as reasonable assurance as in the future as things progress and hopefully evolves in a more positive way?
I mean, so the users of this information are used to reasonable assurance through financial audits. And I think that to close this expectation gap, as this information starts being used more and more and more, I think there'll be a realization that limited assurance and the limits that it has may just expose too many gaps for them as their demand for accurate information increases. And therefore, I still see an evolution to reasonable assurance. Maybe it takes a little longer, but I still see that evolution to reasonable assurance would be appropriate. The timelines really, for me, is what's up for debate.
Thanks, Neil. I think I've covered most of the questions. Is there any other questions which anyone would want to ask? The chat is open. So I can see no additional question, and just wanted to say thank you, Neil and Lee, for your insights. I mean, both of you are such great experts and leaders in ESG itself, and it was a pleasure having you here. If there is any closing statement which you would like to share with the audience, please go ahead.
Thank you very much. Thank you for the opportunity to have this conversation. Let me come back to my opening remarks. This is a really exciting time in terms of the developments that have been occurring with sustainability reporting. And we just need to remind ourselves of, and Neil had it in his last remarks as well, about the timeframes. And so we just need to understand in a short period of time, we've come a long way. Sure, there might be points where we need to pause and breathe and reset our goals, but don't lose sight of the bigger picture, which is actually to deliver a very effective, assured system of reporting, very consistent with the financial side. So I think this is a great time to be involved in these developments.
I mean, like Lee, I think it's a hugely exciting time. It's a lot of work. So it's a lot of work, but as a preparer, your ability to be able to engage on brand new information that's never before been collected and reported, that's going to be really influential around strategy and driving a business, I think is terrific. For assurance providers, to open your eyes to the specialist skills that will come from engineers, environmentalists, social specialists, governance experts, and incorporate those members into your team so that you can really deliver high quality assurance, I think is terrific and exciting. So I think it's a really exciting time. We have to be really bold and ambitious in what the end goal looks like. And like Lee, we've got to be patient with each other about the bumps in the road that we're all going to experience as we get there. But don't let that hold you back. Still be ambitious and bold in what we're trying to achieve. But it is bumpy. These are big new reporting standards. These are complex assurance standards, and we are trying to achieve a huge amount in a very short space of time. And so some of these pauses that do take place, I think, are appropriate, and expect them. Don't let that change your momentum. Keep driving ahead. Don't take your foot off the accelerator. There's still much to be done, but it's really exciting, and I'm seeing lots of momentum, and there are great conversations happening at very high levels. So this is something to, this isn't going away. I think keep at it. But thank you for having us. These conversations are terrific. It helps level set. It helps close a few expectation gaps. And it's so important that more and more of us have these discussions amongst ourselves, with our clients, with regulators, with politicians, and these are good to keep going.
Thank you, everyone, for joining the call today and this important conversation on ISSA 5000. And as ESG professionals, assurance providers, and corporate leaders, I think the road ahead is clearly, and as Neil mentioned, a little bit bumpy. So we need to embed assurance in our sustainability strategy. We need to upskill our teams. We need to strengthen internal controls. And most importantly, we must use ISSA 5000 to transform reporting into a trusted standard. On behalf of our speakers and myself, thank you very much for your time. If you have any further questions, you can still reach out to us on the link provided, and we will definitely respond back to you. Thank you. Oh, Mac.